we wanted to help underserved communities. So we have a bent towards helping underserved communities. And the other bent we kind of have toward in the WIF AX, or me and my partners have, is towards, helping move along and foster kind of women in technology. I'm kind of the embodiment of that at some levels, but there still aren't even enough of me.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside. Woo! Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Airtable himself, Eric Hornung.
Oh, Jay, I love some good processing, some good processes, and we have been under-processed here at Upside compared to the tools that are available out there for our use, one of which is my new favorite, Airtable.
We are under-processed, says Mr. Not Co-Producer himself, Eric Hornung.
Yeah, but I'm stepping into the role, man. I think I at least have like a quarter of the C.
You are waxing.
I'm waxing into the C, and eventually I'm going to have a C and an O and a dash in front of my producer title, which I don't actually have yet.
I welcome the opportunity for you to help out in that process, because there is a process, but I must say, Airtable's looking good. It's looking like it's going to help a lot in our post-production process and maybe even pre-production process. So kudos to you and team interns for getting that in a place that's usable now.
Oh man, Sammy and Izzy, I could not have done it without them. They have put in so much time into just getting this thing up to speed because, Jay, it doesn't really feel like it because, every minute I spend with you is just...
the best?
The best, the quickest. Time flies when you're having fun, all those cliches, right? Because we've been doing this for almost 18 months at this point.
Yeah.
And we recorded a ton of content, and we've learned a lot.
We have learned a lot. And in this Airtable effort, we are still early on. Speaking of early on, we have an interview today with Barbar Bickham, the co-founder and managing director of WIF AX, a fund that just entered fundraising recently here in February of 2019. So WIF AX is a qualified opportunity zone fund focused on building women-led organizations within qualified opportunity zones. It's based in Los Angeles. They have a distributed team that is partially in Tucson as well. But Eric, we thought we'd take a look into the fundraising process, or an early look into a fund getting started with their fundraise.
Yeah, Jay, we talk to companies all the time that are early. That are pre-Series A, that are still kind of finding their footing, their message, and there's always some things to do better and grow into. But we have never talked to a fund that is in the fundraising process and is kind of taking feedback from LPs, updating their pitch, and kind of going through everything. So this should be an interesting one.
It's been quite some time since we talked about opportunity zones in depth on the show. We talked to Peter Brock way back in the day about opportunity zone funds before all of the final guidance from the U.S. Treasury Department was even handed down. So I'm sure we'll get an updated look at what that guidance looks like here talking with Barbara. This is something that I don't spend a whole lot of time reading into, Eric, so I'm sure I'll ask some stupid questions. If you guys have any thoughts on this interview or my stupid questions as we go through it, you can tweet at us at UpsideFM or email us hello@upside.fm, and we'll get into that interview right after this. Hey guys, wanted to give you a quick note and ask for a quick favor. Eric and I have once again entered the South by Southwest Panel Picker competition to have a panel, or maybe two panels, at this year's South by Southwest Festival. Last year, you guys came out in droves and voted for our panel and gave us the opportunity to go and speak with people at South by Southwest about geography versus investing. Does location matter? And this year we have two panels up for vote that we would appreciate your help in supporting. Eric, you want to talk a little bit about your event?
Yeah, so mine is quite the tongue twister, Jay. So if I get through this in one take, it's going to be impressive. It's called Capitalist Running a Cashless Fund. I nailed it. It's about what Jay and I are doing here on the podcast, which is essentially running a venture capital fund without making investments of money, but instead making investments of time and giving people media attention. I think this idea can apply to a lot of other spaces, and we're going to tell our story and also talk about other ways that you can think like an investor, act like an investor without making specific investments. What do you got on the docket, Jay?
My panel is called Connecting Tech Communities Outside Silicon Valley. It's not nearly as fun to say as yours, but this is a panel exploring the ideas of how to connect community builders and different ecosystems across the country to one another. It's sort of this platform role for community that we've talked about more than once here on the podcast. And so if you guys wouldn't mind tossing us a vote, you just have to go to upside.fm/vote. I'll say that again, go to upside.fm/vote. Please give us a vote on both submissions, and hopefully one of them comes through, and we'll see you again this year at South by Southwest in Austin, Texas. Barbara, welcome to the show.
Thank you, Jay and Eric, for having me today.
It's great to have you here. We like to start on Upside with a background of the guest. So can you tell us about the history of Barbara?
I have a computer science degree from Berkeley, so that's how I got into computers. 15 years of very traditional kind of management, architecture and design, development, did a lot of coding, coded on a lot of famous products, coded on something that became the Sportster modem. I coded on something called Web Shield for firewalls. That was Network Associates, which was McAfee as well. That became their biggest product. After that, I kind of went into the wireless space. I started a company there. TechGenI was my company. I did that for 9 years. In the intersection of that, I got the opportunity to do private equity and angel investing. So I started an angel group, 2007. 2008, market crash, a lot less angels. Started that group. Then I went into private equity, did that for a year. Went back to my coding roots, became an award-winning REST API writer. So I did that for an Internet of Things platform. Came out of that, became a CTO. Then I got into this blockchain space. And WIF AX is kind of the culmination of everything I've done. So last year, someone approached me. I was actually supposed to be raising a different fund, but that kind of didn't work out. So then my partners in WIF AX said, "Hey, Barb, let's do this one." So that's kind of my journey.
A lot of bouncing around to new things there. What do you credit your interest in so many spaces coming from, or how did so many transitions happen?
I don't look at it as bouncing around. I have a very eclectic background, and it's helped me kind of shape and evolve to what I am. Number one, the fact that I have such a large background means I can evaluate all different types of companies. I can evaluate all different technologies. I can evaluate all different types of funding abilities. So that gives me an advantage to most people. And then being a technical person as well, it kind of helps me from speaking to investors and other types of people, which I'm asked to do all the time, so that they kind of understand the transition between tech speak and regular business speak. And very, very few technical people can do that. So my background has actually afforded me that, which is great. I've just had an opportunity to do a lot of different things, and I just tried it. So I was like, let me try it. Let's see what happens. If it works, great. If it doesn't, I'll just do something else. So that's just kind of been my philosophy.
You mentioned another potential fund that you were thinking about raising or were starting to raise.
Mm-hmm.
What didn't work out about that, and what did work out about WIF AX?
It's all about the people. So WIF AX, I've been working with my partners in WIF AX in some other capacities in the blockchain space. And so we came together and said, let's do this WIF AX. The other fund just didn't work out because just the people. And that's just kind of it. It's all about the team.
So with your technical background, you've now found your way into blockchain, which is a highly technical protocol. When did you first start experiencing or playing around with blockchain?
So I was aware of it in 2012. I know a lot of the blockchain pioneers in the world. They introduced me to it. One of my friends was like, "Barb, you need to get in here." I was like, "No." I thought it was fake. I didn't think it was real. Just like most people. Then 2015, I got reintroduced to it. Andreas Antonopoulos, I heard him give a talk on kind of the Internet of Money and how money works and kind of the next gen of digital money. So that was great. And I tried to get into it as a developer, but that didn't work either. So I went off in 2015. That's when the second time, and I went off and did a bunch of AI. So I literally have written 6 AIs for all the different types of AI, Google, Microsoft, and IBM. I've written all the AIs. So I know them well. Alexa, I have a skill on Alexa as well, a couple skills. So then 2017, I had a client come in Colombia to Transfer. That's their name. They do payment and remittance on the blockchain, cross border. And then that's kind of the end of the story. 2018, I actually was the CEO, interim CEO of a company. And then kind of after that, it's kind of the end of the story. Now I'm in there. Now I'm in here.
So what changed? Not changed. You had that client come in and they were doing things on the blockchain. Do you remember like a moment or an experience where you changed your mind from I didn't think this was real to oh, this is not only real but really powerful and I want to spend more time in it?
Well, in 2015, when I understood about money and how money worked and how like money could be digitized, that's kind of when I started getting into it. And because I'm technical, I actually had other friends and other. So I did have a project in 2015 that we were going to try and do the ICO thing. It kind of didn't work because you had to set it up in Switzerland. Like the actual creation of the business was more difficult in 2015 than it is kind of now. Now the creation of a business for blockchain and these crypto companies, although you have to do very highly regulated things, is fairly more understood. Back then it required way more money because you had to set up these foundations somewhere else, and then you had to have your company, and then you had to say what's going to open source, what are you not going to, it was a lot from a company side, it was a lot also from a technical side. So 2015, I did have a client then that we were talking making a token and a coin. Now, but I've had other people where they wanted to use Bitcoin specifically for like rewarding or gamifying things. So I do have a framework for that. Like if you want to say, hey, I want to deploy Bitcoin as a gamification mechanism, I do know how to do that. So it's not like I hadn't, like it was like a shock surprise, but it's just like some of these projects, just like anything, sometimes they work, sometimes they don't work. But your knowledge, you still have that. So I just applied it to later. And then when To Transfer came, they were just a more kind of viable company. It made sense it was an international company as well, because internationally the blockchain is more widely accepted, more widely adopted, more problems are solved kind of outside of the US with the blockchain than in the US in the moment. So that's kind of how all that came about.
Something a little topical. Would be curious to hear your take on Facebook's Libra.
Well, I haven't said anything about that. Well, I've said a little bit about that. Libra. So, well, actually, I have said a little bit about this, and I'll put it this way: Libra is a mechanism for Facebook to either do rewards or kind of do some type of monetization of likes and watching videos and scrolling through your Instagram feed and things. This is my take on it because there's some other messengers out there that are actually have coins that are actually going to empower economies. So, you can kind of guess what they are. Telegram is one, Kakao Talk is one. So a lot of these messengers have coins and they're going to empower economies. Why Facebook didn't take that kind of like stealthy, like, hey, we're going to do this Libra and then we're going to kind of introduce it, I don't know. But the other thing about Libra, I mean, Libra is a whole complete ecosystem. Most people are talking mainly about the currency or the token piece of it, but they have a language, they have their own blockchain, they have, so it's multiple pieces. It's not just like here's this coin, and it is permissioned. So you have to look at it that way as well. Is it on? Did they take Hyperledger? Did they take Hedera Hashgraph? Like, did they take J.P. Morgan's? Like, whose blockchain did they use to create this? I don't know. Or they kind of did buy some developers last year, so maybe they've been working on that blockchain piece for a year. I don't know, but I don't think it's going to be. I mean, it's going to be more than what people say. I mean, they released all the white paper and everything, and so I say go read it. We'll see what happens. I mean, it's created a lot of ire in Congress, which is good because at least now we're having the conversations about it here in the U.S. because we're very far behind on even the regulation pieces of that. So it was good in that way.
Can you talk more about that? In what aspects we're behind, or yeah, can you just talk more about that?
Well, if you think about what the blockchain empowers, identity, its efficiency, clearly money transfer, kind of recording, like, who has what, who did what, is this valid or not? Is this a real Louis Vuitton bag or not? So if you look at some of the use cases that are here, we as United States citizens, do we really need the ability to pay with a blockchain? Probably not, because we have credit cards, we have other ways to pay, and we're kind of more advanced in that way versus other places where it's hard to do anything. You don't even have a bank. So, in places where there's no bank, there's no kind of infrastructure for that, they may have one bank, and it's the bank of the country. So, or the fees are so high. I mean, we're doing a lot of work down in the Bahamas, and the fees for banking are just astronomically high. They're taking, 15, 20% of your check just to process the banking. That's crazy. I mean, basically it's a tax. Let's call it what it is, a tax. So how do you kind of resolve that when you have people that are, not as advanced or in these emerging countries, and they're taking 20% of your check just to bank? No, that's what a blockchain is utilized for. So that's why it's kind of taken off in other places versus here, because the first practical use case is money. The practical use case wasn't social media, or it wasn't e-commerce, or it wasn't, a little more on identity verification. It wasn't voting. A lot of us thought, hey, voting, that's a great use case of the blockchain, by the way, voting. But, none of this has happened yet. So the first use case was money. And therefore, you have to look at what are the countries where they're having more problems with banking or money or access to money or access to capital versus the United States. We just are not having those problems yet.
So let's circle back to WIF AX. What does WIF AX stand for, and how did you come up with the name?
WIF AX. WIF AX is the Women's Innovation Fund Accelerator. It's supposed to be an accelerator. And we came up with the name because we have this AX thing, like ACLID EX is AX, and we just have this thing about X at the end. That's how we came up with the name. But what it represents is exactly what it says. It's an opportunity zone fund that helps. It has three pillars to it. The first pillar is that it has sustainability efforts in it. So all the companies that we're going to work with, we're going to put through a program to make sure that they're protecting and kind of preserving the environment. So that's number one, because that's actually one of our monetizations inside of the fund. Number two, we're kind of training, we're going to be investing in the next generation entrepreneur, next generation investor, next generation workforce. So we're doing all advanced tech. We're doing AI, blockchain, AR, and IoT, because at some point, all of that's going to start playing together. When 5G kind of comes and some of these other things happen, all these things are going to start playing together. So you're going to start seeing blockchain and AI, blockchain and AR, blockchain and IoT, IoT and AR. You're going to start seeing them, and then they'll all kind of come together. So we're looking at companies like that. And the third thing is that in order for us to deploy powder to you, you must have kind of a gender balanced C-suite at the C level. So you can have slightly more women than men. But if you have one man, you must have one woman. And I have all the statistics from IDC proving that, and all the statistics are there. If you have kind of a balanced C level, then your company is more profitable. Your culture is more friendly. You have more diversity of thought, which is important. So that's kind of the thrust of WIF AX.
When you're thinking about these kind of edge case technologies, how far out are we going on like the hype cycle? Like, are you going to be investing in like smart dust or edge AI or exoskeletons? Like, how far are we pushing down this to come?
The only thing I would do smart dust, potentially. If it had a good business model, I would do it. So yeah, I would look at as far out as I could go. But the only thing we wouldn't do is kind of the biotech thing. So like if you had smart nanotech, we probably wouldn't look at that, because like we don't have that expertise. So we also have to look at what is our expertise as well, and how can we help serve these companies? Because when you're investing in companies, then really you have to have those expertises. And those are also long cycles. So because our fund is an opportunity zone fund and we already have a long cycle anyway, 10 years is the holding period in order to get the maximum tax advantage for an opportunity zone fund. We don't want to start putting things in there as well that are going to have like 20-year return backs, and then are also very capital intensive. So if you're going to do a biotech firm or you're trying to cure cancer, or something like that, which is awesome, it's a long pole because if you don't get FDA approved fast tracks, we're talking about 10 years wait just to do that. Then you have to do trials, and so it's very capital intensive. So you have to look at the cap, and there are people that do that, and so I would say, hey, refer them to those people. That's what I would do, because it's like we wouldn't do it just from we're already slightly disadvantaged because we're an opportunity zone fund.
Can you talk about when and how you decided to create WIF AX and do these three pillars and make it an opportunity zone fund? There's a lot of intentional decisions that are here. So how did that process happen?
Well, it was intentional because we wanted to help underserved communities. So we have a bent towards helping underserved communities. And the other bent we kind of have toward in the WIF AX, or me and my partners have, is towards, helping move along and foster kind of women in technology. I'm kind of the embodiment of that at some levels, but there still aren't even enough of me. So I'm in the CTO forum here in Los Angeles, and we went from 4 women to 8 women, but there's still like 390 men. So if one man mentored one woman, we'd have kind of parity. Or even if a quarter of the men mentored one woman, we'd have more parity. So you have to look at it as like, how do you move the needle on these things? Men are involved, and we have to get them involved. So we have a great set of men on our board, and we have, we are at WIF AX are walking our walk as well. We have equal amount of men and women. We actually have more women. There's some women we couldn't put on the website for, professional reasons, but we walk our own walk. So, this is our legacy towards technology. It's our legacy towards trying to help and foster the next generation of entrepreneurs, because that's important as well. Deal flow comes from everywhere, all over the world. And there's a lot of deal flow that's missed. There's a lot of deal flow that isn't evaluated. There's a lot of deal flow that isn't looked at just because of the nature of who you are. And we're trying to level the whole thing out. So the fund prior to was esports, and it had the same kind of thrust. So I wouldn't work in a fund that doesn't have these kind of same kind of thrusts. Otherwise, it kind of doesn't, just being a traditional fund is like no fun. So that's kind of how WIF AX came about. That's our bent here at WIF AX. That's my personal bent as well. So
when you think about these 5 opportunity zones you're working in, and you mentioned deal flow comes from across the world.
yes.
How are you getting that deal from across the world to relocate to these 5 opportunity zones? Or do you even need to?
So we do need to have them relocate, well, partially into the opportunity zone. The way it works is you have to have the revenues coming out of the opportunity zone from a business side. And then we have to have a real estate component inside of there. So WIF AX itself is going to have 5 kind of co-working spaces. That's the other uniqueness about us. We're not doing, most opportunity zones are doing kind of traditional real estate. I'm going to build housing. I'm going to build these hotels. I'm going to build like convention center complex, which is great. The other reason why we said we're different from the opportunity zone fund is like we said, hey, these are just one-off job creation abilities. We need to have a continuous kind of job creation machine. So this is the other bent that we have, which is we want to create as many jobs as we can. And the only way to do that is start creating businesses, honestly, because then the businesses can then support the housing. It's not the reverse. Housing does not support businesses. Businesses support housing. Because if you look at like what happened back in the 80s, like Lockheed Martin left, all that whole town disappeared, basically. Like it had to kind of recreate and reinvent itself because it had one main source of revenue. So that's the other thing. We're kind of trying to create other sources of revenue. But you have to have your businesses partially in the opportunity zone. That's kind of the rules.
Pardon my ignorance here. There's been a lot of specifications that have come down about opportunity zone funds since we first covered on the show months ago. You just mentioned there needs to be a real estate component. Is that a guidance that is a requirement of opportunity zone funds? I know that real estate is a good play for it, but you have to have real estate involved?
Absolutely. Yes. That's what the rules say. So you have to have a real estate component. That's why you see a lot of these guys like, hey, I have this real estate and opportunity zone. You have to have a real estate component that has to be in your opportunity zone. And so many people have come down with just real estate, but you can also have a qualified opportunity zone business. They're calling it a QOB, qualified opportunity zone business. but that business has to be inside the opportunity zone and it has to be inside the real estate, inside the opportunity zone. So that's just kind of what the IRS, these are Department of Treasury rules. These aren't my rules. So, we're always kind of making sure we're following the spirit of the law. So, there's no confusion or upset, but you must have a real estate component inside of a fund. So if anyone comes up with an opportunity zone fund and says, hey, I'm just going to invest in companies, that's just not, I don't know how the Department of Treasury is going to take that. I'll say it that way.
So what happens when someone decides to relocate? They want to be part of WIF AX. You guys think they're a good pick. Like, what's the process to getting in and getting funding? Walk me through that.
So what we do is we have we have an application process. You fill an application, and then we actually put you through WIF AX as an accelerator, which we're running some companies through right now. So we actually have two accelerators. We're doing your traditional acceleration. So we run this due diligence intensive to make sure you're fundable, because everyone, as much as they think like, hey, I'm going to get all this money, they're not ready for money. Most people are not ready for money. So we make them ready for money. I mean, we do the traditional pitch deck and stuff like that, but we actually kind of uncover like, here, this is what all the VCs are looking for. This is kind of what we're looking for. This is, and my due diligence is very intensive. It's 23 pages. So I give them a checklist and they kind of go through it. And then we start going over like, here's the sections of the data room that you need. So that's the first thing that makes us unique. I mean, we run a serious due diligence over here. Then the second thing you have to do is you have to go through the sustainability portion to see kind of like, okay, how do we make sure that you're following our sustainability goals inside of our fund? Because we have the real estate component, we have the capability of making sure that we're sustainable as well. So we're doing the same thing that everyone else is doing. So if there's something that you're doing that's going to kind of impact our footprint or our sustainability, then you have to know that. And we have to educate you on that as well. So you kind of go through two vectors, and then we kind of see where you are, how big you are, how much money you need, and then we kind of fund you from there. That's the process. It's very simple. It's not complicated.
So different companies get different levels of funding?
Yes, it kind of depends on their size. We'll do up to like $1 million of checks. We'll do up to that level. We'll kind of start at 120, 150-ish, 150-ish, and then kind of go up there. It kind of depends, because then you got to look at how many slots did you give up, what company is not going to get it, because then it becomes kind of that kind of game. But we'll go up to that.
I saw on your website that you're looking to bring in 200 companies. I just want to clarify, are those 200 companies in this $150,000 to $1 million check size range?
Yeah, so we're kind of doing the Y Combinator 500 startup model. So we've studied all those models, and that's kind of what their model is. We can do, 100 companies at 15 mil. That's 125K a pop. So we can, and then because of our sustainability efforts, we can kind of extend that out. So we can do like carrybacks and take our kind of fees and carryback. So that's how we're going to fund it.
So you have these 5 co-working spaces in these 5 locations, and when you fund a company, they move into the space, they go through your due diligence process.
Mm-hmm.
What happens if they grow too big for the co-working space? Is there new buildings in that zone that you guys own that they headquarters in? Like, what happens if they want to move out?
Yeah, we'll have to relocate them somewhere else in the zone. That's what'll have to happen.
Okay. This is just all ignorance on my part. I've not looked deep into the opportunity zone funds. It's all this guidance is new to me.
That's fine. No, the thing about being an opportunity zone fund, the companies have to be in an opportunity zone, or else they just don't, they won't qualify. So if they need to move out, we'll put them either in a bigger zone, we'll move them somewhere else. We do have a couple of other partner opportunity zones we're working with and looking at. So, we'll be able to service them.
Is there any risk there? If you put a check into them and they operate for 3 years and go through your check and they say, sorry, we want to move to San Francisco because it's just what we think is best for our company right now.
Because they think it's best. Well, I mean, they have opportunity. All of Oakland's like an opportunity zone. I mean, we could put them up there. I mean, we know where all the opportunity zones. At least I do in California. I know where all the opportunity zones are in California. So, if they need to go and relocate to San Francisco because they think that it's going to be better or whatever, good luck with that. San Francisco's gotten cost prohibitive as far as funding, funding a company, as far as living, as far as finding talent, so the other thing is if you do move to San Francisco, we'll put you in a zone, but are you going to be able to afford everything? Because now you're competing against Facebook, Google, and all those guys up there for talent. So you have to look at it from a resourcing side as well. It's nice everybody wants to be in San Francisco, but they only have so many people, and it's gotten very cost prohibitive.
I get it from a LP and from a GP side. From a entrepreneur, why am I picking WIF AX over essentially why us versus everyone else?
WIF AX is unique in that, we're kind of impact driven, we're sustainable, we're kind of balancing out sea level. So that's kind of one of the thrusts out in the world now. So that's a reason to pick us. We're kind of looking at things in a different way than the traditional VC. We are looking at you from that vector. I'm not, we're not naive over here where it's like, oh, we're just doing this socially impactful stuff. I mean, the socially impactful stuff happens to be a part of who we are. So that's important to us. But we're also looking at you from a traditional company side as well. So, like, hey, if we can get a 100x exit, great. Like, we're not going to be crying over here. But we have to look at you in that light as well. So we just look at companies in many different aspects versus just a traditional VC where they're just going to look at you in one aspect. That's number one. Number two, we're going to look at all different types of companies as well. So we do have a very large pipeline. We have about 70 people in our pipeline already. And so we look at all different types of companies in that pipeline. Some of them are women owned, some of them are minority owned, some of them are kind of in underserved communities, some of them came from various and sundry backgrounds. So, it's the traditional people that aren't getting the capital, but have wonderful ideas, have great companies, but are not going to necessarily get funded by a traditional VC either. So, that's a reason to pick WIF AX. The other thing is you're also our portfolio that we're creating is going to have a lot of synergies across it. So you're going to be able to work across with each other. And then we have huge networks. I mean, we have global networks. So like to be able to reach into Korea or, the UK or, even into Mexico or Colombia or into kind of Africa, to be able to reach globally, you're going to only grow and scale your company. So that's another thing that WIF AX kind of can do that a lot of people don't think about. Like, how am I really going to grow and scale my company for real to make it like the next Google or the next Facebook or the next fill in the blank?
Is the women and minority funding gap most prevalent at the early stage? Or like when you're sending someone to a follow-on investor, is there still an inherent bias to a Series A raise where all things considered, the demographics of the founder are higher in a Series A? Or is it like once you get past the early stage, I just don't know the research on this. I know early stage funding is super limited.
So all the funding is limited at all levels. So it's not just early stage. If you came in as, I think if you get kind of past Series A to Series B, you'll be okay. But it's all that kind of early, a little bit up to Series A. And then kind of after Series A, if your company, then you got to grow and scale your company. So when you're growing and scaling your company, you better be going international. You better be thinking about, kind of the global nature of what your company is going to do, because then you'll be able to get Series B. Because then after that, you've proven everything. You've got product market fit. You've got, you kind of have everything. So if you're an investor and you're looking at it from a transactional side, a traditional money side, and like, is this company a viable company? Have they been around long enough? Is their team good? Things of that nature. You should just look at it that way. Now, is there bias? There's bias in everything. Bias in AI. Everybody was doing that face app. I didn't do it. Everybody's like, why not? I said, well, bias. Why do I want my face in an AI? Honestly, it was just like, what they're going to use that for, right? So, there's biases everywhere. We all have bias. We all have kind of our unknown biases to ourselves, our kind of subconscious biases. So how do we kind of get over that? We just have to get over it. I mean, look at things in the vein of how you would look at it from anywhere else. Like, why does it matter where it came from? If it's a good, viable, strong company, what does it matter where it came from? But we do have outputs to all those, we have outputs to all those levels. You have to, as a part of being a part of a fund, you have to also, not only from LP and GP, you also have to be able to make sure, like, hey, your part of the stack is going to get taken care of. Because if I'm investing in you early, I want to make sure I'm getting something later. And it doesn't always happen because you're not always thinking about it that way either. But this is why you have a team of people. This is why funds have multiple partners in it, because some partners think certain ways, other partners think other ways, and this is why it's powerful to have a team in a fund, because there may be some things that some people are thinking about that you're not, and vice versa. So it's important to have that.
Can you talk more about your team at WIF AX? I saw you guys brought on a lot of advisors to help cover all kinds of areas. Can you talk more about the partners or the founding team?
So I'm one of the founders. I'm one of the managing partners. My other co-founder is Jessica Contreras. She actually is very successful in the alcohol business, and that's a family business as well, which is very fascinating. Her grandmother taught her that. That's a family recipe. It's a tequila company. So the way Jessica and I came together was I'm advising her on her blockchain portions of the company. And so we kind of have this separate ACLID project, which is everything kind of blockchain. And so that's how we came together. And then we said, hey, let's just keep going. So we're very synergistic. We're very strong, two very strong women, which is great. And we get along wonderfully, which is important, because sometimes, like I said, the other fund didn't work because of that. Didn't quite get along, didn't quite synergistically match. So that's kind of Jessica in a nutshell. So she's kind of managing, we're both doing fundraising, and we're raising for this fund as well. And we're both kind of doing our work to get the WIF AX kind of off the ground. We both have identified opportunity zones. So we're synergistic, and then we each kind of have our role in the fund as well.
How long have you been fundraising for?
This is February. So after we set up the bank accounts, we've been fundraising since then. But there's a lot to do to raise a fund. You have to get all your paperwork together, subscription agreements. You have to get all your, we have to get all our proper Reg D, Reg A plus. You have to get all your paperwork together. You're not just going to say, hey, I'm going to raise a fund and then think that that's just going to happen. So we had to get a lot of paperwork together. You have to get special bank accounts, because you're not just going to put that money to, like a traditional bank. I won't say Wells Fargo, but a traditional bank. You're not going to put it into a regular bank. So like you have to get special accounts that can handle that kind of money, and then managing the money. So we actually have a very special account. We have somebody that's going to like manage the money for us as well. So, because we're emerging fund managers, sometimes that's kind of a sticking point. But when I say like who's managing the fund, and they're like, oh, never, okay, we're good. So they don't have a problem with that, because they're like, okay, that was smart. And then, once we start getting some more powder in there, then the person that's helping us manage the fund, that'll kind of unlock some things as well. So
what's the biggest area of caution that LPs tell you about your idea and your raise?
I think the biggest area of caution has been kind of that it is an opportunity zone fund. And when you say that in the beginning, everyone thinks you're doing real estate, and it's kind of like an initial kind of turnoff. But then when you say what it is, they're like, wow, we had no idea. Then when you say like, how is this fund going to be monetized? Then they go like, wow, this is really different. This is not like anything we've ever seen. And so I said, yes, this is true. It's not like anything you've ever seen. And then that kind of opens up the conversation. But you have to get past that first, like, this is an opportunity zone fund, because most people think it's just real, like we're doing another housing project or we're doing another like hotel, but we're not. So I have to really explain, like, I have to say it's an opportunity zone fund because it's tax advantaged. So like there are tax advantages for that. But then I have to explain, well, how are we different than every other opportunity zone out there? And then that's where our uniqueness comes in.
Awesome. Well, we're at time here, Barbara. So obviously I have lots of questions about opportunity zones that we could continue to talk about if we had more time, because I'm so green to it. I don't even know how to ask.
We can come back and have another conversation.
If people want to learn more about you or WIF AX after the show, where should they go?
You can go to our website, www.wifax, WIFAXVC, all one word, .com. That's how they can learn more about me and WIF AX.
All right, Jay, we just spoke with Barbara from WIF AX. Early fund here, still in the fundraising process. What'd you take away?
I know less about Opportunity Zone funds than I even thought.
Jay, we had someone on who talked to us for a full hour. Shout out to Peter Brock. And you still don't know anything?
Well, my understanding was that real estate was a prime use of the Opportunity Zone fund guidance. And some people thought that startups could work as well. I did not think or know that even the startup-focused funds needed to have a real estate component.
Yeah, that was a little confusing to me as well. I thought you could invest in startups that were physically located in opportunity zones. And maybe there was a little bit of miscommunication, or maybe we just don't understand the newest guidance that came through.
As Barbara said, she's had an eclectic background that's given her a lot of insight into a lot of different industries and topics, which brings her to a unique intersection of a lot of those topics here with this Opportunity Zone Fund investing in women-led businesses, or at least in balanced businesses from the C-suite's perspective. How long do you think it takes to raise a fund like this, Eric?
Well, we didn't ask for a total commitment that they're looking at. She did say 15 million divided by 100 companies is like roughly 150,000 a check. So I'm guessing there's a real estate component on top of that. I don't know how big this fund is going to be, so I'd be completely speculating. That being said, there's a lot of nuances in this structure, so it's not as plain vanilla as, hey, I'm going to go raise a fund, we're going to invest in this many companies a year, it's going to spit out this, and we're going to do that, and here's what we're looking at with our batting averages. There's a real estate component, there's an accelerator component, there's this long due diligence process, which she said was 23 pages. So it's a different kind of model, which is fine. I just think that means that you're going to have a longer time horizon until you raise. So they say to raise your first fund, you should plan on 6 to 18 months. So I'd probably put it towards the back end of that 6 to 18 months until they do their hard close.
Yeah, there's a lot going on. And I think as a country and as anybody in the Opportunity Zone space, there's going to be a lot of learning with what happens when companies want to move. You know, Barbara was very much in the camp of, well, we'll help them find an opportunity zone where they're trying to move to, which is great if the founder wants to listen and take that guidance. But literally, what happens if they don't? You know, if the money has already been consumed, it might be something that you just contractually have to put in the investment terms to say, if you move, we can take this investment back. I don't know how that all works. It just seems like it could get messy for any company and any Opportunity Zone fund.
One thing that I do like about WIF AX is these kind of 3 pillars that they talked about. They really stand for something, right? If you can get your branding right around these 3 to 4 pillars, depending on what we look at here, then you can be the place to go for this certain type of company as an accelerator, which I think right now is a very underserved demographic.
I agree. Well, Eric, this just spurs me to think that there's more I need to learn about opportunity zones. Maybe we bring in someone who's close to the legislation side of things that can help explain it in even more finite detail for us. In the meantime, if you, dear listener, know a lot about opportunity zones, we'd love to hear from you, or if you have a recommendation for who we can speak to, you can email us hello@upside.fm and let us know, or tweet at us at upsidefm.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter @UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
never mind. The road that can't be matched. I'm lighting it on fire. Used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep on rhyming, find a way and get it.